Hey everyone, today we're going to be speaking with Basile Senesi. He's the Chief Revenue Officer over at Arc, and he served as the CRO and VP of Sales at a number of fintech platforms. Now with Arc, a YC company, he helps empower startup founders with a better banking experience. I'm super excited about this conversation. We're going to be diving into building out efficient growth within go-to-market teams, opportunities for sales team productivity with tooling, and then also co-pilots within the sales process and how that has the potential to transform sales motions. Alrighty, really looking forward to this conversation. Let's go ahead and jump in.
Thanks for having me. Excited to be here.
To kick things off, I'd love to learn a little bit more about Arc and the go-to-market motion that your team employs.
Arc has two core product pillars, and ultimately those two product pillars have two different sales strategies. Our very first product was a bank account product focused specifically on early sub-Series A founders. That product is heavily PLG, although not exclusively, and I'll double click on that in a second. We also have an upmarket capital platform really focused on helping CFOs and CEOs raise traditional and non-traditional debt, venture debt, lines of credit, etc. That is a true direct outbound, much more enterprise-looking type sales motion with a sales team behind it, really driving volume into the pipeline. When I say PLG's got a pretty broad definition. It can range from everything from freemium to very user-enabled and sales-assisted along the funnel. For us at Arc, it's really dependent on how customers come to us in the first place. Ultimately, the product itself is heavily self-service. Our users don't need our help to get into our platform and start getting value out of the platform. Ultimately, though, just because a user self-services on our platform doesn't mean that there's not a lot of work that happens upstream to make sure they know about us. And so our sales team is different in that their day-to-day isn't just driving business to a contract and a close. It's building enough awareness within the right pockets of their territory such that when there is a need to open a bank account, that person comes to us, whether through the rep that worked them in the first place or on their own through our website and kind of the self-service channels we've set up. It's a tough act to get right. It's got a lot of downstream implications, but PLG at Arc looks a little bit different because of that.
Interesting. And what does the sales team split up look like?
You can think of it broadly as having, again, two halves. So a capital-focused team and a banking-focused team. On the capital side, it's pretty easy. SDRs mine lists for companies that have recently raised or companies that fit specific criteria. They tee up appointments, and then that AE ultimately gets the customer to both sign an engagement letter with us and then ultimately upload financials and handholds them through the rest of the platform onboarding. So that one's pretty easy. Put that to the side for a second. On the banking front, that team is what we call relationship managers. Relationship managers is a fancy way of saying full cycle sales reps organized by specific geographic territories. More specifically, they start at the very beginning, top of funnel. So on a given day, an RM might be pulling a list or an RM might be attending an event. We host quite a bit of events. And as we get deeper into this podcast, I'm sure we'll talk about channels. For us, meeting our prospects face-to-face goes a long way. It's a big part of what they spend their time doing. It's soliciting referrals from their existing book of business, but ultimately it's driving top of funnel demand. It's also monitoring our inbound channels because a lot of the effort that we've put out into building kind of awareness around our brand does drive people organically through our funnel. And so those same RMs, even as they're generating interest through their outreach and their presence, are also managing the inbound queues as they come in, again, by territory primarily. Once things are in the funnel, it's one thing for users to want to use our product and evaluate our solution. It still requires a lot of elbow grease to get them convinced that our solution is the right one. Even though it sells itself, it doesn't, right? And so the sales team is spending a lot of time on calls with prospects, explaining how to think about our solution relative to, say, Brex or Mercury or other competitive players in the market. And then ultimately they help the user onboard and they manage that user throughout their life. Of course, post first deposit, we have a client service team that kind of bolts into the relationship and helps take some of the pressure off of the relationship manager who goes back to focusing on hunting. But because these are accounts for life, because those seed stage customers go on to raise Series A's and Series B's, we want to have a continuous face that customer can interact with along the way. So it's a real balancing act of success and selling all wrapped into one role. And that makes it pretty unique.
As you kick off Q2, what's top of mind for you when it comes to your revenue strategy? Are you focused on pipeline generation, conversion, a little bit of both? Where's your attention going?
Yeah, look, we're a venture-backed company, so growth is everything. And the downside of success is that now you set the bar that you have to beat. For us to continue doing well this year, it's not just about hitting plan, it's about being better than what we were 3 months ago every time.
Yeah.
And because we've had a couple of great quarters since SVB, we continue to need to accelerate further and further. So that's definitely top of mind, right? Additional top of funnel to feed that kind of pipeline is important. To your point, though, conversion is the kind of North Star metric for us here at ARC, because ultimately the TAM, the total addressable market that we're working with, is not infinite. And we need to be very thoughtful in the fact that we have a finite pool of would-be customers to move through our funnel and into customer. That's really important for us in Q2. Frankly, as CRO, for me, the single biggest thing that is top of mind in Q2 is efficient growth. And of course, that is a function of conversion, but it's also a function of our unit economics. And that word is one that I spend a lot of time kind of thinking through, both on the front end. So how much is a customer worth and how much can we afford to spend on acquiring a customer? But then also the long tail of it. How can we expand that customer revenue over time with other products like our tech products and otherwise that help us continue to capture more value over time? The challenge we have, and I think this is increasingly common in the industry, we're not B2B SaaS. We don't sign 12-month contracts and have people keep coming back to the well to pay for that every year. We're utilization-based. We're much more of a transactional type business. Even contract-driven SaaS companies today are increasingly seeing a big part of their revenue line be transactional revenue. And the challenge with transactional revenue is it's a lot less predictable, it's a lot more volatile, and it's a lot narrower margin oftentimes than your enterprise contracts are. That means you don't have a lot of maneuvering room for error on acquisition cost if that drives the bulk of your unit economics and your lifetime value for a customer. I think a simpler way to say this, Cory, I make sure we don't spend too much money winning a customer, because we have to be really sure that our modeling and our estimates of what a customer is worth pans out. And there's a lot of variables downstream that influence that outcome.
When it comes to how much it costs to acquire a customer, how much does the size of your sales team come into play? And is there anything that you're doing to enhance your sales team's productivity per rep in order to achieve those goals?
Yeah, like you can look at it in one of two ways, right? And ideally both. All things being equal, do the same results with less, or do more overall without spending commensurately more. And I think there's oftentimes focus on solving for what we know works and trying to do that more efficiently. And what we know works is you hire people, those people sell the product, and that product generates revenue for the business. But I think we are seeing a paradigm shift across the industry, and definitely one here at ARC, where we're thinking about the realm of the possible per head in a very different way, quarter on quarter, enabled by technology. When I look at our P&L, a lot of the questions focus around how do we continue growing top line without adding headcount at the same rate as that top line growth? And the answer most of the time is driving higher productivity through software on our team. Instead of hiring another SDR, how do we make an SDR do 25% more so that in aggregate, we're ending up further ahead than we would be with that same level of spend on another human? It's a lesson that was, on the one hand, learned the hard way by a lot of companies since 2022 when the market contracted and efficiency became the name of the game. But it's also not only a lesson learned, it's a lesson made possible to solve for based on a lot of the tech that we've seen come onto the scene in the last few years. So there's this perfect kind of mix of CROs, VPs of sales, CFOs want efficient growth. They want to hire less people to get to the same top line targets. And tooling exists now that makes that much more readily possible for companies like us.
Yeah. And what tools are you currently leveraging to advance those objectives?
I think about sales tooling in kind of two categories, right? Automation versus copilot. Can I replace somebody's job with a tool, or can I augment somebody's productivity with a tool? And I think in my experience, at least, talking to other CROs and other folks in my seat, the decision on which one makes the most sense really depends on both the sales motion and the point in the pipeline that you're talking about. The general trend is that the more sophisticated the product and the end buyer, the more the trend is towards copilots. Take really smart salespeople and make them focus on what they do best, automate the mundane, eliminate a lot of the busy work, and improve their understanding of their end customer through AI and technology. That's your enterprise sales copilot. That makes a lot of sense. On the flip side, an SMB motion probably benefits less from a copilot, and it's much more about setting sales motions on rinse and repeat. Because sophistication is less important, velocity is more important at that point. Conversely, I think the other kind of axiom that I think about here too, where in the funnel are you? Generally, again, different companies will have different points of view on this, but generally the deeper into the funnel you are, the more copilot matters. The earlier in the funnel you are, the more automation matters. Copilots for SDRs are less of a popular thing than copilots for CSMs, for incremental data for a CSM. And I think that's true for us. Look, realistically, when I think about what tools we use, we were built on the original kind of basic stack that a lot of companies are. Salesforce plus Outreach is the name of the game for us. We've had that. We'll see when this podcast comes out and maybe I'll surprise our Outreach reps, but we're in the process of outgrowing Outreach, not because we're getting bigger, but because they're not meeting our needs in the same way that other tools in the markets are. We're really excited about Unified GTM as an alternative and a replacement to Outreach, because effectively it will be the SDR in a box that we can't get through Outreach. With Outreach, it's a tool that we have to hire people for to drop things into sequences and to manage inbound leads and source outbound leads. With Unify, we can take that motion and just set it on autopilot so that we don't need to keep hiring SDRs to get meetings on our AE's calendar. That's probably the biggest one that I'm looking to right now as transformational for our business. We're also early and ongoing users of Momentum AI, which was one of the first conversational intelligence tools. But I think even there's first mover hasn't necessarily meant best tech. And so while we've had them for 2 years alongside Outreach and these other tools, I continue to view there being more value to be had by taking the conversations our sales and CSM teams are having and applying those insights to actions in a more, call it, direct way, and eliminating a lot of the busy work post-call that I think our reps can benefit from. So that's a little bit of a window into our thinking. Ultimately, we're focused on this category. We're spending money in this category because it's the right way for us to grow into the future.
When you think about a little bit later in the funnel, what are the biggest opportunities that you see for those co-pilots for the teams that are a bit later in the funnel? You mentioned some automations. What does that augmentation look like to you in an ideal world?
Yeah, I think it's a couple of things. It's doing better on the call and then shortening the time between the demo and the next action on the prospect that I try to solve for. Doing better on the call means going into the call with a better understanding of our customer and a better set of questions to ask based on who that customer is and how they may react to our product. Demos historically have generally been ask some questions to learn about the customer and then present your product with some tiebacks to those questions. That works, but that is generally pretty simplified. We work with such a wide array of companies with a wide array of needs and things they care about that us turning that curiosity into a really clear way to position our product relative to what they care about goes a long way. We don't do enough of that because it takes work to do that. Preparing those calls better, I think, would be the first step.
When it comes to the enablement needs of your reps, how do you trade off enablement trainings versus software that can meet some of those gaps?
Man, it's such a big question. I think about this all the time, right? People get excited about software and they see a demo and they're like, I want it. I want what that guy showed me on the screen. I want my team doing that. The reality is there's a level of commitment, effort, and ultimately time and money that you have to invest into getting to that point. And so I think part of what I try to weigh as we're making decisions on software adds to our team is, frankly, what is the cost? Not just the monetary cost of signing up for the product, but what is the team cost on going from where we are today to actually using this product in full? It's RevOps time, but it's also rep training time. It's learning curve. It's adjustment. That's hard. And I think in my experience, even the most tech-savvy reps go back to what they know when things don't work. And so having a really thoughtful, oiled rollout of a given new product and new solution is essential to early buy-in and ultimately to that product sticking. Companies like Scratchpad have done a really good job of this. Companies like Outreach haven't, or Salesforce notoriously hasn't. And people generally don't update the CRM, not because they don't care about the data point you're asking them to update, but because the hoops they have to jump through to do that work. So there's this kind of like sales reps are lazy type of a generalization, it's not because they're actually lazy. It's because they're looking for the most efficient path to do what they're here to do, and that's close business. If the products get in the way of that, then they don't generally use the products in the right way. So I'm really thoughtful around onboarding, implementation, training as it relates to new technology. Of course, you're right. Your other point on how can enablement help play a role in up-leveling the conversation and making sure that my reps are asking smarter questions, are more curious about the company, and ultimately having more impactful conversations. Of course, that's table stakes. And we analyze our call recordings, and we do sales trainings that kind of aim to solve all of that. But I think what I've learned is that there's work before the call and there's work on the call and after the call that time tends to box out and just make impossible at a startup of our stage. There's too many things going on for people to do enough homework before jumping on a call to tailor the call perfectly to what it needs to be.
Yeah.
And so a lot of these AI type copilot things that I get excited about solve for, tell me about the call I'm going to jump into as if I had done a whole bunch of research and lay out that information for me in a really clear way. And then I think what I'd be equally excited about is, and hold me accountable to that research and that information while I'm having the call as well. Because it's one thing to do homework ahead of time. It's another to default back. Here's my script and here's my demo. You could train all you want, but the reality is you have to provide that training and that feedback in a very contextually relevant way for an AE doing a demo to be able to apply the information.
And when it comes to tracking the engagement of resources that you've given your team on calls, do you have any mechanisms for doing that today? For instance, if you want to roll out a new talk track where you're saying, hey, we want to make sure that we're highlighting these points to these types of individuals, what mechanisms do you have in order to make sure that's actually being accomplished by your sales reps?
It's a very salient point because we test a lot at Arc. Okay. At least we think we test, as in we change stuff all the time, and we want our team to take those changes and run with them and tell us what's working and what's not. And we often are pretty good at deciding what we want to test, and we're often pretty good at hearing the aggregate, summarized, kind of synthesized feedback from our reps on how it went. We're not actually really good at being able to say, but did it happen that way? Did we have talk track applied to these types of audiences? It's a lot of trust, right? It's not a lot of verification that goes into that. For example, right now, we're rethinking pricing for a set of our customers. It's fluid, so we need to ask questions differently. We need to we need to get away from talk tracks that have worked to try talk tracks that are new. And that's scary. And I can't, without going through call by call, which I don't have time to do, I can't validate or verify that we're using the right talk tracks every single time. That's a gap for us, and I would love to be able to solve that.
Yeah. And I know you mentioned that you're using Momentum. Does Momentum help with this, or are you using any tools like Gong or Chorus, the conversational intelligence tools out there for trying to identify those gaps?
Gong is our vendor, and Momentum kind of rides on top of that. We're using the whole iceberg analogy. Like, we're using whatever is above the waterline, but there's a whole lot below the water that we don't see or don't use that Gong could provide. For us, Gong is a call recorder, and then it summarizes those calls so we can break them down and understand them. But we're not necessarily mapping to specific preset categories in Gong. We're not necessarily identifying whether every part of the call script was followed or not, whether elements were met or not. That's not because the tool can't do it. It's because, like most people who buy these products, you buy them for one point reason, and you rarely do the right work unless you have a team fully dedicated to this of using 110% of the product surface or given. You generally rarely grow into those. And I think that's been the case for us at Arc.
I know that you had talked a little bit about how your AEs are preparing for their calls. What distinguishing qualities do the leading AEs and SDRs and managers on your team possess? What kind of makes them stick out from the rest of the group?
I think they're very curious. It's probably the single biggest thing that drives differentiation. They don't take a script and read it. They try to understand who's on the other side of the phone and what motivates them. And to do that, they try to walk a mile in their shoes a little bit and really see the world from that person's perspective. And we have the benefit of working with CEOs who range from building IoT for nuclear reactors to building B2B SaaS. And it gives us a lot of room to be really curious. Frankly, it's fun to be curious. The reps who do well connect with those founders on a level that matters more deeply than just How does your current bank stack work? What are the gaps and how can we do better, right? It's not because I believe that relationships drive the sale. Sure, they matter, but they're not the thing that ultimately is going to make a CEO or a CFO change a business decision. But it's because that curiosity unlocks a rep's ability to get at the heart of the true motivating things that are driving decisions for a given organization. I can say that very differently. Take the debt side of the house. If I read you a script about debt, you're going to have very different considerations on how you think about debt as a B2B SaaS early stage founder than a CFO who's running a battery company, because your CapEx and your operating like leverage and your top line revenue and your gross margin profiles look so different that the things that are impacting you from a cash flow perspective and the types of debt instruments that might make sense are dramatically different. Curiosity, not as a way to just build rapport, but as a way to deeply understand the things that are hard to otherwise uncover from just straightforward Q&A discovery, differentiates the good from the great, at least at Arc.
If you had the power to instantly resolve one issue for your sales team today, what would that issue be and how would you resolve it?
I want my RMs to do what they do best, which is speak one-on-one with founders about the benefits of our product in a convincing way and get those customers to sign up. For every one of those conversations, there's a myriad of other activities that my team has to do that isn't that. And so I would like for them to wake up every single day with a wall-to-wall calendar of those conversations. Now, again, back to the unit economics comment earlier, the way many B2B SaaS organizations solve that, you hire SDRs and they plaster your AE's calendars with meetings. And even then, that's rarely ever how it works ultimately. But we can't do that, both because of a structural sales model reason and because of a unit economic reason. And so I want to find tooling that automates as much of the SDR motion as possible so we can scale the SDR motion well beyond what it's able to do today internally. That is the single biggest thing that gets me excited. I think the other thing that I would probably also be incredibly grateful for is better signals identification on when deals are at risk of going stale. We have a pretty wide funnel and our reps are focused on a wide array of activities. It's very easy for things to slip through the cracks. And I would like to have a better read any given day of the week, like where a person's time should be spent other than generating new business within their current pipeline. And today it's a little bit of first in, first out type of thing, or it's a little bit of gut, but not a whole lot of signals kind of intelligence.
I am curious, do you see augmented intelligence allowing AEs to perform a lot of the functions of SDRs, or would you prefer a world in which the SDR workflows are fully automated? Do you want that man in the middle, that human in the loop? Or would you rather be fully automated, those calendar meetings are just getting set instantly?
No one's posed that question to me before. And I think my gut reaction is generally automating the SDR function is aligning on the P&L as much as possible. Probably makes the most sense to me. However, giving an AE the tools that let them very easily do the job of an SDR is probably more akin to what we actually need here at Arc. And I don't know if it's possible or realistic, but I think that would be the better way to do it. If my AEs can go into these calls with an assistant who helps schedule calls and make sure that their calendar is full, with somebody doing a bunch of research on the call before they jump on it so that they don't have to, and can present that information in a really clear way. And then a list of things to focus on ahead of the call, and then that person slacking them based on the conversation they're having, things to ask along the way. That is the SDR equivalent that I would want my AEs to have.
Well, I'm not going to plug Wiser here, but I love hearing that. We've talked a lot about sales teams, go-to-market teams so far. What we haven't talked about is the rest of the organization. And so when it comes to those go-to-market teams interfacing with your customers, they often hear quite a bit that can lend to a better product overall. What role would you say customer feedback plays in shaping the sales strategies and product offerings over at Arc? And how do you work with the R&D team to make sure that feedback loop is extremely tight?
It's everything. We're the tip of the spear on our customers' desires, feelings, frustrations. And notoriously, no sales org is ever as good as a product team wants them to be at collating, aggregating, and synthesizing customer feedback for the sake of informing product discovery. I wish we were better. We share gong call recordings a lot today. Finding gong call recordings that perfectly speak to a topic to highlight a point is hard. Like every other organization, we disagree with product on what features should be built in what order. Nobody's ever perfectly aligned. I think we've come a long way. We have done a much better job of training our team and then ultimately equipping them to highlight the sound bites that will help move the needle on a specific roadmap ask. And I think more mechanically, the benefit of a CRO within the organization is my job is to pull on most threads within the organization to deliver on revenue growth. And the thing that helps us do that is acquiring more customers, retaining more customers, and expanding with our customers. And the easiest way to do all that is to give them the features that they're willing to pay for, that keep them with us for longer, and that give them more surface area to use with us. So there's an inevitable need. I'm not just focused on one part of the organization acquiring, one part of the organization retaining, one part expanding. There's really a full view on this stuff, which means that by default, everybody that rolls up to me also cares about that to some degree or another. And we have a unified voice within the business where we can talk back to product on getting alignment around the things to build, always with a strong case made around like why we have conviction that something is important, both with customer examples, usually in the form of a gong call, plus like back of the napkin ROI understanding of the impact of a given feature.
How do you ensure that it's not that one gong call where you have a loud sales rep and a loud customer that's asking for a particular feature? How do you ensure that's not what's getting prioritized and you're actually using quantitative data to understand what your customer base needs and your prospect base needs at scale?
It's really interesting because for us, we're early, right? So we're not a scaled organization yet. And it's really easy to get bias around which customers should carry the day on the product feedback side of things. Not just because it's necessarily like customers who scream the loudest, but because when you're a Series A company, your customer count is small enough that customers have outsized influence, even if they're not technically a huge customer, right? We don't want to churn a customer that feels big today that 5 years from now might not be a big customer. So we're solving to like the current book. And I think we see that quite a bit. Look, for me, the answer has been pretty simple. We do solve to perceived LTV. So we will elevate priorities that we think unlock near-term LTV or that unlock large pockets of long-term LTV. What I mean by that, more specifically, we're a feature-heavy business type. Banking is, do you do X, Y, and Z? Do you charge for X, Y, and Z? It's very like black and white on the things that you need to be competitive. We're able to use large customers that are at risk of churn as an easy way to point to reasons to build. But equally important, we aggregate feedback along the way on reasons that we can't close deals that we then use to inform a bigger, longer term view on like the product roadmap. So I work it into two, right? If we don't do this, we're going to lose actual revenue versus because we don't have this, we can't win this revenue. And we have regular conversations with our CPO on how to pull from a little bit of both sides as far as our upcoming product roadmap goes. I do think we have good alignment. I think that alignment starts to become wider as you grow as a company. We're still lucky, but even today we have our challenges.
I think as sales teams become more specialized, as you have SDRs, BDRs, AEs, solutions consultants, it's like you get all these different points and interfaces for feedback, and it increases in that challenge. But I know we're at time. Baz, I can't thank you enough for joining me here. So thank you again.
Thanks, Cory, for having me. A lot of fun.
Thanks so much for listening. If you're interested in learning how you can apply an AI copilot to your own go-to-market motion, don't hesitate to reach out. Thanks again, and looking forward to more of these conversations.